Welcome back to Effortless Investor, the channel where we talk all things investing and personal finance without all the unnecessary jargon. Monthly income products have exploded in popularity recently, especially here in the UK. And honestly, it's not difficult to see why. Who wouldn't want to receive dividends every single month rather than waiting 3 or even 6 months for an income payment? But there's one problem. There are now dozens of monthly income products available to UK investors. Some offer yields of 4%, others promise 10%, and some are even advertising eye-watering yields of more than 20%. So which one is actually the best? Well, that's exactly what we're going to find out today, because I've taken 7 monthly income products that UK investors can buy inside a Stocks and Shares ISA and put them head-to-head in the ultimate showdown. We'll be looking at traditional dividend ETFs, covered call ETFs, and even some higher risk income share products to determine once and for all which monthly income investment comes out on top. I've also asked both the Effortless Investor community and ChatGPT to predict the winner before looking at the data. And let's just say the final results weren't exactly what I expected. So grab yourself a tea, sit back, relax, and let's find out which monthly income ETF deserves the crown. Before we get started, I just wanted to remind everyone that nothing in this video should be considered financial advice. I'm simply sharing my own research, opinions, and analysis for entertainment and educational purposes only. Always do your own research and make sure any investment is suitable for your own personal circumstances before investing your hard-earned money. With that being said, and before we dive into the data, I wanted to see what the Effortless Investor community thought would come out on top. So I put a poll out to you guys asking one simple question. Which monthly income product do you think is the best for UK investors? And honestly, the results weren't even close. A staggering 54% of voters backed LDGG to take the crown, making it the clear community favourite by a huge margin. In second place came JEQP with 17% of the vote, followed by QYLP on 11%. The remaining assets received significantly fewer votes, with NVDI receiving 7%, JEGP and SDIP both receiving 4%, and JEIP bringing up the rear with just 3% of the vote. Now, I can't say I'm entirely surprised by these results. LDGG has generated a huge amount of interest among UK investors recently, largely thanks to its focus on monthly income combined with a more traditional dividend investing approach. But popularity doesn't always equal quality. So the big question is, will the data support the community's choice? Or are we all suffering from a little bit of recency bias? Of course, it wouldn't be an Effortless Investor video without asking the all-knowing oracle that is ChatGPT for its opinion. So I asked ChatGPT a very simple question. What is the best monthly dividend ETF available in a UK Stocks and Shares ISA? And interestingly, ChatGPT didn't choose the community favourite, LDGG. Instead, ChatGPT crowned JEGP as its overall winner. According to ChatGPT, JEGP offered the best balance between monthly income, diversification, and long-term growth potential, thanks to its global exposure, covered call strategy, and attractive yield. ChatGPT also highlighted JEIP and JEQP as strong alternatives for investors seeking higher levels of income, whilst noting that more traditional dividend investors may actually be better served by a broader dividend-focused strategy. Perhaps most interestingly, ChatGPT warned investors not to simply chase the highest yield available, pointing out that many covered call funds sacrifice some capital growth in exchange for those larger monthly distributions. And honestly, I think that's a really important point. After all, a 10% yield isn't particularly attractive if your capital is slowly disappearing over time. So the stage is now set. The Effortless Investor community believes LDGG is the clear winner, whilst ChatGPT has put its faith in JEGP. But which one will come out on top once we put all 7 assets through our scoring system? Let's dive into the methodology and find out. Now, before we jump into the rankings, it's important to explain exactly how these products were scored, because simply looking at a dividend yield and crowning the highest payer as the winner wouldn't tell the whole story. After all, a fund yielding 20% might sound fantastic on paper, but if it's charging high fees, lacks diversification, or slowly destroys investor capital over time, is it really the best choice for long-term investors? Probably not. So to make this comparison as fair as possible, Each of the 7 products was scored across 8 different categories, with every category receiving a score out of 10, giving a maximum possible score of 80 points. The first category was income. After all, these are monthly income products, so the level of income generated is clearly important. Next came reliability. I wanted to reward products that have demonstrated a consistent and dependable approach to generating monthly distributions. The third category was fees. Lower costs mean more money stays in our pockets rather than the fund managers. The fourth category was diversification. In general, products holding hundreds of companies are likely to be less risky than those concentrated in a handful of stocks, or even just a single company. Fifth was simplicity. If a product is so complicated that most investors struggle to understand how it works, it probably shouldn't score highly. The sixth category was ISA friendliness. All of the products featured in today's video can be held inside a UK Stocks and Shares ISA, but I also considered how widely available and accessible they are to UK investors. Seventh was transparency. I wanted to reward funds with clear, easy to understand strategies and straightforward objectives. And finally, perhaps the most important category of all, long-term suitability. Because whilst generating monthly income is great, I suspect most of us are still trying to build wealth over many years or even decades. With the methodology now explained, it's finally time to find out which monthly income product deserves the crown. Starting in 7th place, and perhaps unsurprisingly, we have NVDI with a score of 45 out of 80. Now before any NVIDIA fans come after me in the comments, let me explain. NVDI is a fascinating product. It generates income by combining direct exposure to NVIDIA shares with a cash-secured options strategy, resulting in the potential for extremely attractive monthly distributions. However, the key word here is potential. Unlike every other product featured in today's video, NVDI provides exposure to just a single company, NVIDIA. Whilst that concentration could lead to exceptional returns if NVIDIA continues to perform well, it also introduces a significant amount of risk. Add in the highest fee in today's comparison at 0.55%, a relatively complex strategy, and the fact that the issuer specifically states that the product is intended for sophisticated investors, and it becomes difficult to recommend as a core long-term holding for most investors. That said, if your primary objective is maximizing monthly income and you fully understand the risks involved, NVDI may still deserve a place as a satellite position within a diversified portfolio. But with a final score of 45 out of 80, NVDI takes 7th place. Moving on to 6th place, we have QYLP with a score of 59 out of 80. QYLP uses a covered call strategy on the Nasdaq 100, allowing investors to generate attractive levels of monthly income from some of the world's largest technology companies. The income on offer is certainly compelling, and the fund has gathered a respectable amount of assets under management. However, there are a couple of drawbacks. Firstly, the fund holds just 81 companies, making it one of the least diversified products in today's comparison. Secondly, with an ongoing charge of 0.45%, it is also one of the more expensive options available. And finally, its heavy concentration towards the technology sector means investors need to be comfortable with periods of potentially significant volatility. As a result, QYLP finishes in 6th place with 59 points. In 5th place, narrowly missing out on 4th, is SDIP with a score of 66 out of 80. SDIP takes a much more traditional approach to income investing, focusing on global, high-yield dividend-paying companies rather than options strategies. For investors who prefer receiving income directly from company dividends rather than from selling options, this will undoubtedly appeal. The fund also benefits from a long-established investment process and provides exposure to over 100 global companies. However, higher fees, lower diversification compared to LDGG, and a focus on higher yielding stocks slightly reduced its overall score. Nevertheless, for investors seeking a more traditional dividend strategy, SDIP remains a very strong contender. Just edging into 4th place is JEQP, also with 66 points, but scoring slightly higher in the income category. JEQP has become incredibly popular amongst income investors, and honestly it's not difficult to see why. The combination of monthly distributions, a covered call strategy, and a yield that has recently approached double digits makes it a very attractive proposition. In addition, the fund has accumulated more than $3 billion in assets, demonstrating significant investor confidence. However, JEQP's focus on the Nasdaq means that investors are heavily exposed to the technology sector, with a relatively concentrated portfolio of just over 100 holdings. And as a result, whilst JEQP offers fantastic income potential, it loses points on diversification when compared to some of the more globally diversified alternatives. Taking the bronze medal in third place is JEIP, with an impressive score of 68 out of 80. JEIP provides investors with broad exposure to US equities, whilst simultaneously using covered call strategy to generate additional income. One of JEIP's biggest strengths is its balance. It offers significantly more diversification than JEQP, with over 250 holdings, while still maintaining an attractive income profile. Combined with a competitive fee structure and strong accessibility for UK investors, JEIP emerges as one of the standout products in today's comparison. Ultimately, JEIP falls just short of the top two positions, but it remains an excellent option for investors seeking monthly income from US equities. Which brings us to second place, and ChatGPT's pick, JEGP, with a score of 69 out of 80. JEGP impressed across multiple categories. The fund combines global diversification, attractive monthly income, and a covered call strategy designed to generate additional cash flow without becoming overly concentrated in any one region or sector. With more than 240 holdings spread across global markets and over $1.5 billion in assets under management, JEGP offers what many investors will consider to be the perfect balance between income generation and diversification. In fact, if your primary objective is maximizing monthly income while still maintaining broad global exposure, JEGP may well be the best option available. However, despite its many strengths, one product managed to score even higher. And so, taking the crown as the best monthly income product available to UK investors is LDGG with an outstanding score of 74 out of 80. Interestingly, this was also the overwhelming favourite amongst the Effortless Investor community. LDGG stood out for three key reasons. Firstly, its enormous diversification, holding nearly 1,000 companies from around the world. Secondly, its incredibly competitive fee of just 0.29%, the lowest in today's comparison. And finally, it's straightforward, easy to understand investment strategy focused on generating sustainable monthly income through traditional dividend investing. Unlike many of the options-based products featured in today's video, LDGG doesn't sacrifice potential upside in exchange for higher yields, making it particularly attractive for long-term investors looking to build wealth while still receiving regular monthly income. For those reasons, LDGG comfortably claims the title of best overall monthly income ETF available in a UK stocks and shares ISA. Now, whilst LDGG may have taken the overall crown, I don't think investing is ever quite as simple as declaring a single winner. After all, every investor has different goals, different risk tolerances, and different income requirements. So I thought it would be fun to hand out a few special awards. First up, we have the award for Best Long-Term Wealth Builder, and this one goes to LDGG. With nearly 1,000 holdings, the lowest fee in today's comparison, and a straightforward dividend-focused investment strategy, LDGG simply ticks the most boxes for investors looking to grow their wealth over the long term, while still receiving regular monthly income. If I was building a portfolio designed to last decades rather than years, LDGG would almost certainly be my first choice. Next, we have the award for Best Balanced Monthly Income ETF, and the winner here is JEGP. JEGP offers what I believe is the sweet spot between income and diversification. Investors receive attractive monthly distributions while still benefiting from broad global exposure across more than 200 companies. For those seeking a healthy monthly income without becoming overly concentrated in US technology stocks, JEGP is incredibly difficult to ignore. And finally, we have the award for Best Product for Maximizing Monthly Income. This award goes to NVDI. Now, before everyone rushes off to buy NVDI, it's important to remember that higher income almost always comes with higher risk. NVDI used a sophisticated option strategy centered around a single company, NVIDIA, which means investors could experience significantly greater volatility than with a diversified ETF. So whilst NVDI may offer the highest income potential in today's comparison, I personally wouldn't consider it suitable as a core long-term holding for most investors. Instead, I'd view it as a specialized satellite position for experienced investors who fully understand the risks involved. And honestly, I think these three awards perfectly demonstrate why there is no such thing as a universally perfect investment. The best monthly income product for you ultimately depends on your own investing objectives. So there we have it. After analysing 7 monthly income products available to UK investors, LDGG has officially been crowned the best overall monthly income ETF. What's particularly interesting is that the Effortless Investor community also backed LDGG to win, proving that sometimes the wisdom of the crowd really does get it right. However, I don't think there's a single perfect investment for everyone. If your priority is long-term wealth building alongside monthly income, then LDGG would be my personal choice. If you're looking for a balance between attractive income and global diversification, JEGP is incredibly compelling. And if your sole objective is maximizing monthly cash flow, then products such as NVDI may be worth exploring, provided you fully understand the additional risks involved. But as always, these are just my opinions, and I'd love to hear yours. Do you agree with the rankings? Was LDGG a worthy winner, or do you think another product should have taken the crown? Let me know down in the comments below, because I genuinely love to hear which monthly income product you think is best and why. And if you enjoyed today's video, please consider leaving a like, as it really helps support the channel and lets me know that you'd like to see more ETF comparison videos in the future. If you're new here and enjoy realistic investing content, monthly portfolio updates, and discussions around building wealth over the long term, don't forget to hit that subscribe button and join the Effortless Investor community. Thank you all very much for watching, and I'll see you in the next one.